Hi all, this is Akshara Menon from PMS Bazaar. Welcoming you all to the episode 2 and season 2 of Alternate Universe. On the topic, the multi-geographical perspective of wealth management and asset management industry. With no delay, let me introduce the speaker of the webinar, Mr. Virendra Somwanshi. Virendra Somwanshi is the president and head of wealth management and capital markets of Bank of Baroda, overseeing the strategy and execution. With over 25 years of experience in retail banking and private wealth management, he has held leadership roles in both multinational and Indian corporations served on various boards. He has spent 17 years at Citi working in consumer banking, wealth management, and investments in India and Singapore, ultimately becoming the country head of Citi Wealth Advisors. Before joining Bank of Baroda, he was the MD and CEO of Motilal Oswal Private Wealth Management, a thought leader in wealth management. He frequently represents the industries in various forums. Mr. Somwanshi holds a bachelor's degree in mechanical engineering and MBA from Symbiosis Institute of Business Management, Pune University. He's also sports enthusiastic and an avid marathoner. Moving on to the next, Mr. Vikasam Sachdeva. He's an industry star with over 3 decades of experience in asset management business. He's currently the managing director of Sundaram Alternatives, driving growth across different platforms and geographies and asset classes. The second moderator of the day, Mr. 𝐬𝐩𝐞𝐫. He's a financial services professional with over 3 decades of experience across mutual funds, alternate assets, wealth management, fintech, TPD, and broking. He is currently the Chief Business Officer at Sundaram Alternate Assets. Before giving the podium to Mr. Vikas, I would request the participants to drop their questions on the Q&A box. Over to you, sir.
Thank you, Akshara. It's always a pleasure coming on the PMS Bazaar platform. Welcome to the show, Virendra. Uh,
Thank you. Thank
I
you very
must.
much.
It was very nice of you and very gracious of you to just accept the invitation to be on our show on one phone call. Thank you so much for that. Uh, I must tell you, Virendra, before we start off, that as always, we've done a lot of digging around, if you will, trying to find out what the person behind the professional Virendra Somwanshi is. So we've spoken to your colleagues, we've spoken to your ex-colleagues, and in some cases, your friends. Okay. Of course, we will not tell you who they were, but we will tell you what they have talked about you. So I'm just going to share a few things. Shall I just proceed?
Yeah. I mean, now that you asked people, I hope they're saying only good things about me.
Well, I've got only good things. So let me just start off. By the way, I tried very hard to find out a few things which are your personality quirks, but apparently, one of the most common things your colleagues are saying that you're a very straightforward person. What you see is what you get. There's a lot of respect for you for that, and probably that is the reason why I could not get the answer to the question, what are your personality quirks? So one thing which is very clear is that you're very straightforward. uh, you read a lot. Uh, you read a lot. You read autobiographies or you write books written by CEOs. That's one of your favorite genres. Now, this immense reading actually helps you to blend quotes, anecdotes, and examples into discussions to convey your point seamlessly. You actually are a very gifted orator, according to a lot of people I've spoken, and you can hold people's attention for a very long period of time. And one of the weapons in your arsenal are these quotes, anecdotes, and examples. Also, this was very sweet when people said that you have a very dry sense of humor, which you blend into conversations, and at times people are caught off guard. They don't know whether it was a joke or they should take it seriously. But I found that to be very sweet. As a manager, you drive your team very, very hard, but also know how to balance guidance and freedom. Again, I think this whole thing about your team respecting you knows that you will guide them and give them their space when it means to achieve their targets. You're a fitness enthusiast, an avid marathoner, and you are now learning swimming in preparation for the Ironman event. That's Ironman event is one of the toughest events. So, my compliments to you for trying for that. uh, no wonder you're a stickler for the right food. You always want to eat the right thing, except for sweets, which are your weakness. And from what I gathered, according to you, there are no bad sweets. There are just good sweets or very good sweets. Am I right?
Absolutely. Absolutely.
You're usually very sharply dressed. and almost always in a suit. You're pretty well organized and have your facts in place. Your son Vedant is 16 and plays football. And one of the simple pleasures of life which you have is to watch football with your son, preferably live football in the stadium. Your daughter Ishita is 18 and she's currently studying overseas. Your better half Shweta is also a working professional. Now, this is something I can identify with. You're a typical number one as per numerology. You're December 10th, but you're a typical number one. And as straightforward as you are, you made it very clear to your team that one of your pet peeves is if they don't adhere to timelines or at least replying on time. Well, in case they do that, you don't hesitate to send a strong message across to the relevant teams, ensuring that things get back on rails. So this is Virendra Somwanshi, the person behind the professional, and I had a great time. My team had a great time getting this information about you.
Yeah, so Vikas, compliments to you. I think you really dug deep into it. So you have one more hat of a, CBI agent to understand all the nuances, but no complaints because most of the things are, true.
So talking about CBI agent, which certainly is not a very good thing to talk about right now. Uh, Indian markets went through a very turbulent time recently, reacting to election results, but seem to be stabilizing now. While one could argue the impact of politics on the capital markets, which is something which one can do on and on again. But I think one of the things I'd like to start off is to find out what is your view on the trajectory of the Indian markets post elections in the short, medium, and long term.
Sure. So first of all, Vikas and PMS Bazaar, thank you very much for inviting me. It's a pleasure to be here. And, it's always pleasure to talk to Vikas and, about markets and life in general. Coming to your specific question, since it's about markets and, the volatility due to elections and all what is happening today, I remember the, famous Hollywood filmmaker Jean-Luc Godard's quote. He says that for every story in a film, there has to be a beginning, a middle, and an end, but not necessarily in the same
In
sequence.
that order. Yeah.
Right? So markets are
Very
like
nice.
that.
Yeah.
And as
Yeah.
far as India is concerned, we know the direction is where it is going. It's always towards the northeast side. The
Hmm.
sequence, of course, can keep changing depending on multiple events which happen. And one such event is, what happened a couple of days back in elections. And of course, the markets tanked because there was a perception around the exit polls hype. And then vis-a-vis that, there was a setback. So what markets don't like is uncertainty, and they definitely appreciate stability. In fact, on Monday, if you see the incumbent government came back in Mexico, and the Mexican markets fell by 6%. So the same government
Yes.
actually came back, but the markets fell by 6%, and the peso actually was also all-time low compared to the last few years. So of course, it's the nature of the market to react to events like, whether it is elections or budget or whatever. And that's how the markets are. But I think, volatility is the nature of the game. Short-term events will continue to come over a period of time and markets will continue to be volatile. But as all of us know, in the long run, markets are slave to the earnings. And when you look at the India growth story, I think structurally the story continues to be very intact. A large part of the uh, reforms and initiatives which the government has taken will continue, I think, even with the third term of the this government. And hence, a lot of things in terms of formalization of the economy, thrust on infra and manufacturing will continue to be there. And inherently, I think, all of us now know we've been talking about for the last 15, 20 years about this whole India growth story. But now, finally, I think we are at a clearly inflection point, and this whole piece on whether it is favorable demographics or, I mean, at the end of the day, there are two things. One, are we headed for a great earnings story? And I think 12 to 14% is what most estimates talk about the earnings story going ahead. And then will there be enough money to chase these earnings? And clearly, as we can see, I mean, the FIs have been negative for the last 2, 3 years, but our domestic investors, including retail SIPs, are now record breaking every month. And that's a huge amount of liquidity coming in. So earlier it used to take about 8 to 10 months for a growth of 1,000 rupees of SIPs every month. Now it is happening almost every month or every alternate month. So 20,000 crores coming. So we are, I think, in a very, very great shape. And, like I said earlier, all the demographic factors reflecting back into the GDP growth, inflation is looking way in control. Of course, interest rates will continue to now go down at some point of time, and that will give further boost, to the economy. So all in all, I think, we are in a great shape. And I think purely from an investor's perspective, I think the next decade, there is enough and more money which is to be made. And I keep saying that people who missed the bus in the last many years, I think an opportunity to create wealth in the next 10 years, more than what we've seen in the last 40 years.
That's amazing. And I couldn't agree with you more. Uh, I was speaking to somebody I think a few months ago, and he says that if at this stage you are in India and you are into equity, if you don't make 10 times in the next 10 years, you're losing out on something. Every asset class will do well, but equity is the one which is likely to do the best. By the way, this is not an advice to people. This is not, I'm not asking people to jump into equity. Like the usual thing which we mentioned, please consult your financial advisor before investing. But moving on, that's a very good answer you've given. But that is at a macro level, and that is something which I think pretty much we all agree on. At a micro level, where I think you have an even greater insight, which is where I want to pick your brains on. What options do Indian HNIs and ultra HNIs have in today's day to invest across a multi-geographical spectrum? We've talked about India. Of course, India is there, but a lot of Indians want to start investing overseas. So, what options do these Indian HNIs and ultra HNIs have?
No, I think it's a excellent question, because I think in the last few years, we've seen a increasing appetite of global investing for many of the Indian residents.
Hmm.
And very simplistically, again, I mean, Warren Buffett had once very nicely said that diversification is protection against ignorance, right? But you can really
Very
plan your
nice.
diversification across geographies. And while we, fully bullish on the India growth story, if somebody, let's say, has a dollar liability or a international currency liability for the future, I think it makes immense sense to take money out through the LRS route. Okay, to start with, there are two ways you can invest into international markets. Either you invest into rupee or you invest in dollars. Rupees is very straightforward. There are a lot of these fund of funds or feeder funds who invest into international markets. I believe currently there is a cap which the RBI
Yes.
had put in terms of $1 billion and most of since the cap is not yet open, I guess there is a bit of a restriction in terms of investing in rupees through these fund of funds. But having said that, through the LRS, you have an opportunity to move about close to about $250,000 on a yearly basis. So this money needs to move out of India, and then there are plethora of options. So one can look at, let's say, buying direct equity stocks in Dow Jones or Nasdaq or any part of the world. There are funds which are easily available, across multiple geographies. There are globally, of course, the alternative assets is emerging as a big category. Whether it is stocks or in fact even real estate, now, there is fractionalization is also in a big way. So if you want to buy, let's say, half a share of Apple as an example, or you want to buy a small part of a real estate, which is, in Dubai, even those options are there. So there are various ways in which you can do now. So one is obviously going through a fintech which has global tie-ups. You can, and these fintechs do facilitate opening of the accounts through cross-border. Second is, there are global banks who have their offshore sales centers in countries, let's say, like Singapore. There are local businesses which will have international tie-ups. And like I said, primarily the fintechs have, diversified. So they've had their backend stitched in these various countries, and the front end is on the app where you can do investments. But I think the most exciting thing which is going to evolve, or which is already evolving, is the gift city option. And I think very clearly gift city is getting positioned for both the inflow of foreign money coming into India to be invested into either India or overseas, or the Indian money which is, let's say, through the LRS route coming out and then wanting to go into various other countries in the world. So there are already funds which are established in the gift city which invest into various parts of the world. And depending on which part of the economy feels exciting, right? Uh, and there are, of course, various factors like the way you invest into India in terms of taxation, in terms of some countries have a capital gain tax waiver, some countries have different taxation, you have liquidity norms, there are political stability. Hong Kong used to be a very good destination. There is political issues now for the last few years. Europe is having a very different economic scenario. The tech stocks in either the emerging markets or in the US are in a different trajectory. So there are ways and means you can invest through these various platforms.
Very interesting. I think this is quite insightful, and I completely uh, agree with you on the gift city option, at least. One of the things, I was talking to some global investors, and I said, listen, gift city is coming up, and you guys are still holding back. Why are you not coming into gift city? So I think the common refrain was, we are waiting for the elections, and maybe we'll make a move once we see continuity happening. I think what you're saying will start playing out in the right earnest now that the elections are behind us. So very, very valid point. I'm sure my colleague Dave also has a few questions. Dave, why don't you just take over the next question?
Hello, Virendra. Good to meet you over this platform. You had a very
Hello there.
stellar stint as banker with Citibank for a couple of decades, and you also now, for the last few years, you've been with Bank of Baroda. I have two questions to you right now. What roles do bank and a large financial institution like yours play in the development and growth of wealth management in India? And the second one is, what is so specific this factor that distinguishes you in the market when compared to others?
So good question. In India or anywhere else, it is said that banks are in the business of scale and NBFCs are in the business of efficiency, right? I think the beauty is if you do wealth management, you can do both at scale and efficiency through banks in India. And I think, because, the banks and financial institutions are the primary conduits for individuals and businesses when they, from a pure accessibility for wealth management segment. Even globally, in many developed markets, financial advice has, always a people element embedded, which ensures that, there is a significant role the distributor plays in that. But I think more importantly, in the context of India, large banks like us who have, a huge distribution network in the nook and corner of the country, bring with it, the breadth of the distribution brings both accessibility and information, which is really fostering financial inclusion, right? So when we talk about various developments in the country, because if you have the touch and feel of a bank, and we'll talk about certain platforms later, but banks leveraging their existing networks and more importantly the customer relationship across various products. When you try and offer, let's say, solutions across retirement planning, or investments, or for that matter protection, I think you're already increasing the reach. And I think one of the clear factors which we've seen during the COVID was, I think banks were at the forefront to also offer health insurance for many customers. And pre-COVID, people who had taken health insurance were pleasantly surprised because the awareness in India on health insurance is relatively lower. But when casualties start hitting COVID and people who had taken health insurance came back, and I remember thanking many of our branch managers and the bank officers saying that, thank you for giving us the right product. So clearly, whether it is investing or partnering with, let's say, fintechs with respect to infrastructure and technology, the support to the wealth management can only exponentially grow from here.
Mhm.
The other thing is also, I think, purely from a compliance perspective, the reporting and all that, I think, banks have a format to keep doing this across multiple products. So that also brings in that extra comfort.
Very interesting. Virendra, you mentioned about networks, the penetration. You spoke about accessibility. Typically, a bank like yours, which is one of the largest PSU banks, having, I think, if I'm not wrong, it is about 5,500 branches across the country. Is that correct?
Yeah, almost 8,000 branches.
Wow, 8,000 branches. I'm sorry. I mean, that means you're catering to two different segments of the country, which is India and the Bharat. Could you just throw some light as to how does the bank help in the Bharat segment of the in the market in creating wealth and reaching out to them to giving them the scientific advice that you would want to give, which is unbiased as well?
Yeah, so a simple concept, like if I were to just, let's say, take the example of IPL. IPL is democratized uh, talent access for, let's say, if you were to pick up the best 11 people in the country, IPL is democratized the access for talent across the nook and corner of the country. And then you have
Correct.
some star players coming from, villages and tier 3, tier 4 cities, because now there's a platform to do that. I think similarly, Bharat has a very different setup. And if you look at the whole rise in economic growth, particularly after COVID, what has happened is the whole acceleration and adoption of the digital platforms has suddenly made wealth management completely democratic. So what was a domain of, let's say, ultra HNI, HNIs or institutions in larger urban centers is now available uh, to all the smaller cities, towns, villages, courtesy this huge dramatic shift which has happened. And there is far more acceptability of some of these initiatives, not only in the metros, but even in the tier 3, tier 4 cities. So, banks like ours, because, whether it is adoption of different platforms or, making simplistic products, SIP again is a fantastic example. Such a
Mhm.
simple product backed by an ecosystem of, let's say, the marketing campaign which happened in mutual fund Sahi Hai, it just sporadically increased because people realize that at 500 rupees you can start investing. It is very simple. It is trustworthy. So one is, of course, there is a huge ecosystem which needs to work across the asset management company, the banks, the regulators, AMFI, and of course, all the advisors and distributors put together. Product simplification, I already mentioned to you. But I think what we have also seen, and when we say about wealth creation happening, we have examples in deeper cities for some of the names also which I haven't heard in, deeper markets. And suddenly somebody wants to have that confidence because he's probably invested into SIP or a mutual fund to start with. And
Correct.
then now he's asking us, okay, do I have this big pot of money? I have 10 crore, 20 crore to invest. How do I do? And traditionally, obviously, mutual funds are clearly the best form of investments, very simplistic, transparent, tax friendly. But many of these large ticket sizes then also attract attention that, okay, I want to have slightly more concentrated bets. I want to also have a flexible cost structure as an example, or I want to make sure that, I only invest into a certain sectors. So clearly this whole, and we are one of the few public sector banks which started the whole access of PMS and AIFs to all our customers, right? And suddenly then we realize, oh, there is a huge segment of customers who's ready to buy these PMSs and AIFs. And then
Mhm.
all what you need to do was create, a ecosystem for them to transact and get aware about it seamlessly. So through a centralized, office, we guide them in terms of the risks involved, in terms of the lock-in periods, in terms of the taxation, in terms of, what are the risk elements. And then, of course, if there is a close-ended or open-ended PMS AI, depending on what product we're talking. And then the local branch is actually the, touch and feel, and he can go, and there is that whole trust which is there because it is in his own residence.
Yeah.
So I think it's a nice way to make the some of these products which seem to be very exotic, only available for metros, but there is huge appetite even in the so-called Bharat, as you rightly said, and we are seeing a huge growth and adoption of these products, including mutual funds, into these smaller cities as well.
Very interesting, Virendra. Yesterday, I attended a conference on family offices. I met a senior person from Deloitte, and she was telling me the maximum demand for trusteeship advisory and tax advisory is coming from tier two and tier three cities. And it's more than the urban centers, which was very interesting insight that I got yesterday. That's why I asked you this question about Bharat and how does it work, Interesting. Vikas, over to you.
Thanks, Dave. So while I was listening to you, Virendra, and this entire conversation is very interesting about Bharat and India. I'm just looking at it from another perspective, and I wanted to pick your brains on that. At the end of the day, these are products which a large swath of people have not been exposed to. When we are talking about alternates and PMS, right? And of course, you are simplifying the narrative, making sure that people understand that when I'm talking about you, I mean I'm talking about us as an industry. But what keeps me awake at night is, how do we uh, a make sure that the client understands the risk, we're going into the right risk profile, and two is how do we integrate these assets into client portfolios while managing both liquidity and risk. uh, what is your how do you handle this sort of situation when you're talking about client portfolios, because the demand is huge now. Access to information is such that everybody wants to invest in everything, but then how do you balance this entire thing in terms of risk management and right selling?
No, I think it's a very pertinent question, because while there is democratization and access to the platforms, the client suitability and product due diligence are the two major pillars in assessing and integrating these products in the client portfolios. Now, the question is, how does one execute it at the ground? So, like I said, and of course, there is a huge research in terms of the fund's investment strategy, their track record, what's the management team. Like I said, there are at times flexible fee structures in the underlying assets. And depending on, what we are doing in terms of there is Cat 1, Cat 2, Cat 3, private equity, hedge funds, we want to invest into pre-IPO funds. And so now there is, unlisted equities. So there is a huge plethora of exciting opportunities. People hear it, right? And what used to be, let's say, a steam bar discussion is now becoming a regular discussion, saying that, okay, am I
Oh, yeah.
missing out something? There is this whole FOMO feeling that, okay, the market is having so many exciting opportunities. Am I missing anything? And when you go to a, whether it is a gym or a evening party, and you suddenly see, okay, your neighbor has bought something, and you feel, oh, am I missing out something? So I think the whole thing is the awareness levels are exponentially growing. The key continues to be not so for a distributed large branches, large bank like ours. What we did is a two-tiered approach. We made the product available on a very selective basis, and also made sure that if people are at the ground level, let's say in cities where we do not have a relationship manager posted, and like I said, many of these interest levels are coming from cities where we don't have professional relationship managers posted. So for those set of customers, the branch and the branch office ecosystem continues to be there, but they, on a referral basis, then they call and say, okay, this is a customer, he's interested in so and so, and then we have a centralized office who then takes him on a video and explains him about the nuances of the product, the risks involved, and there is a investment counselor sitting in the larger metro city who's engaged with them and takes him through the whole journey in terms of disclosures, in terms of risk, in terms of lock-in periods, in terms of cost structures. And if there is buy-in, and if there is a clearly consensus, then of course you go ahead. I think the challenge for us as a country is, how do we do this at scale?
Correct.
Because more than 60% of our HNI clients in the bank are outside of the top 30 cities, and I would assume it's reflecting of what the country proportion would be. So your top 30 cities, of course, are concentrated and they are taken care of, but beyond that is where the whole thing is. And to a large extent, I think digital platforms will help and aid the transaction part of it. So operationally, it will be far more convenient because, like I said, if you want to do it at scale, that can be done on the digital transaction platforms. But the whole information, awareness, disclosures, all of that, I think, will continue to be done at a centralized level till such time we deeply penetrate this city in terms of big advisors.
Very interesting. You talked about technology. You talked about using technology, leveraging technology. I have a couple of questions on that, or rather, just one question split into two parts. Uh, how do you, a firm like yours, how do you leverage technology to enhance a client experience? Clients coming onto your platform. How do you leverage technology to enhance client experience? Because you are doing this at scale. In the truest sense of the term, you're doing this at scale. And also at the back end, how do you ensure that operations are streamlined? Is it something you do everything in-house, or have you outsourced it to certain people? I'm just picking up 2 points which you mentioned. One is technology, leveraging technology, and the other is at scale. So that's one part of the question. And the second part of the question is, as much as what we would want to do, there is a certain regulatory environment under which we operate. So how is this regulatory environment, aiding and abetting your decisions in terms of innovation, adoption of new technologies in wealth management?
Okay. So, if I can use the word called as re-platformization or re-platforming, I think it's a big thing which is happening because old archaic platforms are going for a change. And thankfully, wealth management is a relatively newer, I mean, in India, we've been there for, let's say, last 15, 20 years. But the platforms, unlike the banking platforms, are a relatively new platform. So, though there is re-platforming happening in most firms, I think at the core of it is investor protection. Because if you look at all the platforms, what you're trying to do is making sure that there is enough investor protection is inbuilt into these platforms. Now, as far as, and I mean, there is wide popularity. We've seen those fintechs going and penetrating. There is huge surge in individual ownership of stocks through various fintech platforms. Even in SIPs now, wealth tech platforms in India, 40% of the new SIPs are actually originating from those digital wealth tech platforms. So clearly it is on a rise. So what we did is two things. We actually went through a process to identify the right partners for us. And then we actually have worked over the last 2 years with fintech firms who have specialization into investments and insurance separately. We onboarded these two vendors and integrated their platform with our core banking system and got our. So investments was easy because it was integrated to RTAs, but insurance we have, let's say, who are our partners. We got those partners integrated on the insurance platform, and then the platform got connected with our core banking system. So as we talk today, our investment platform, as an example, customers can go on to our banking app and do their own profiling, do their own risk assessment, and start transacting. So they open their investment account and then they can just start doing on their own. The second is we also have an app which is outside of our banking app, which is a standalone investment app. So if people want to just bypass the banking app, but just want to go and start there, they can do that. But I think the bigger shift which is happening is that now we have a app which is, so this is obviously the DIY and customer initiated journey. But I think all our processes now are fully automatic where the employee-led journey is completely digitized. So the need to have a paper or a wet signature is completely taken off. So you have your entire, risk profiler, you have the entire need analysis on the financial side already inbuilt into those journeys. And then whoever does any employee-led transactions go through that journey because you can't bypass the steps. You have to necessarily go through those steps. And of course, there is OTP which is getting generated, which the customer then authenticates it. for the product which he's buying, for the profiler which he's doing, and then eventually debiting his bank account. So that one, from a client perspective, it is transparent, it is efficient, and like you mentioned about, experience, rather than going and giving a form and doing a wet signature and waiting for the funds to, the NAV to come. Here it is, or even on insurance for that matter, we are now live with life insurance, health insurance, motor insurance. So people who want to buy, you can go directly on our website or on the app, or the employee-led transactions also are very seamless. So the policy is also issued instantly. He exactly knows what policy at what form is coming through it. And the experience is far better because he's not chasing, acha, mera policy kab se milega, kahan milega, email pe milega, whatever. And then he can go and access those platforms and also see visibly, okay, this is the details of the policy. So I think these platforms, while they are in the initial stages of adoption at our end, so once we have launched it, we've already seen the customers are coming directly and opening SIPs and lump sum investments there. But I think a big shift will happen when all our internal employee-led transactions get onto these platforms. You will suddenly have efficiency, great client experience, and complete eradication of the paperwork.
Interesting. Uh, why this question is of particular interest to me is because at Sundaram Alternates, uh, we are digital first. I love the word which you use, re-platformization. I think
Replatform, correct.
we are actually doing that at our end, and you have encapsulated whatever our thought process is in one word. Absolutely right. I think this is something which we need to do, and good cues I've picked up from you. I'll probably go and check out the app, the website, and also I think it'll give us some insights. Uh, Primary thing is customer experience. I think if you crack the code there and customers are happy and they're coming there on their own, I think it's a brilliant thing. Dave, you want to take over?
Yeah. Virendra, I'm going to touch upon one of my most favorite subjects, which is the ESG, environmental, social, and government. Though it is I have a strong believer on that, but not many things are being done, which is actually replicating those three words, right? So my question to you is, what are the cultural attitudes towards ESG as a principle towards wealth management strategies that you've seen across the globe? And what do you think are the trends that are emanating now in India? And do you see there is a strong adaptation that is happening towards this strategy of ESG? Are they taking it seriously? Your customers.
No. So, of course, we all know that, developed countries have always been at the forefront of, sustainable investing movement, and, the cultural attitude of investors in developed markets towards ESG significantly influence some of these, wealth strategies.
Mm-hmm.
But most of these countries, if you look at it, the investments is into the ESG aligned companies and stocks. And this is, pretty much now the mainstream activity, which is towards sustainability and responsibility. Now, in one of our, partner companies, which has a presence in one of the European country, we went through that framework that there are, specific scores which are attached in those frameworks, which give you specific, sustainability scores. And then when you build a product around there, whether it is a green bond or let's say socially responsible mutual fund, or, even ETFs, which are having ESG theme, these are readily available in, Europe and some other American companies. Now, obviously, when you are having these products, they are specifically catering to the value system and also generating financial returns. In fact, there's a McKinsey study done, which, they published a report on the ESG where it says that the triple outperformers, that is, companies that achieve stronger growth and profitability than their peers while improving sustainability. And like I was mentioning you earlier, the ESG scores deliver almost 2 percentage points greater annual excess total shareholder returns, than companies that are, excel only on the financial matrix. So there are obviously evolved matrices to tangibly evaluate the excess returns which are coming through it. And given a choice to investors between, let's say, two products, one, focus on, let's say, a green energy, carbon-free, net zero companies, and giving you, let's say, a couple of percentage points better returns, I'm sure there will be an inclination towards that. So emerging economies are also now adapting to this trend. Of course, the adoption is far more slower than what we have seen there in the developed markets. But, I mean, in pockets, you have Brazil, India already witnessing a gradual shift towards, ESG integration. We have now funds in India also, which are dedicated ESG funds. And, many of the so let's say even banks, right? Now we have banks which are giving loans which are only into, so let's say green loans.
Green.
Or now we have, two banks I know, including ours, is launched something called as green deposits, right? So clearly these are going into focus sectors which will benefit, the whole environmental awareness and, ESG focused investment opportunities. So I think it's just a matter of time. We've seen that passive investing in advisory are big things in the US and developed markets. But last 3-4 years, using passive was missing in India, and suddenly it is picked up steam. So I think it's a matter of time that even ESG is gonna pick up, and I think it will be a center theme very shortly.
Very interesting. You said 2% differential return on an annual basis. So if I compound it over a period of 20 years, 30 years, it's a huge difference in returns, right?
Yeah.
So that's an amazing thing, but somehow it's not getting popular in India because I don't know for what reason. And 2% is a huge differential. That's an interesting thing. Second thing you told me about is green deposit. I'm hearing this for the first time. Does it mean that you'd be investing, taking the money and investing in some kind of green projects only, or how does it
That's right.
follow?
That's
Okay.
right. So there is when you collect these green deposits, there is a specific area where these deposits will be lent. I mean, the loans will be lent to specific sectors.
Oh, nice. Very interesting. Virendra, you've worked with a cross section of companies in your career, be it MNCs or Indian companies, and dealt with different clients across geographies. What are the three things which do you think are necessary when dealing with international clients?
So of course,
We are
whether
getting
it
some
is
trade secrets from.
So I think at the core of it, whether you are talking about international clients or domestic clients, it always pays off if you are transparent about your transactions, about your information, about your disclosures, and about the downsides and upsides of the products, right? So that's universal. However, like I was telling you, wealth management is relatively about 20, 30 years old in India. In developed markets, it's been there for a longer period of time. And some of these markets have been, have evolved over a long period of time. So from a client perspective, they have far more exposure, and we have a restriction of the LRS to, let's say, $250,000. Many countries do not have there is no currency convertibility issue. There is a full complete so they are free to invest in any market. So the awareness and the options are extremely high. So the first step when you're dealing with international clients is, I think, the need analysis needs to be far more elaborate, far more detailed, and if possible, if one can make it more standardized, I think that's the first requirement. Because if you have too many options, you need to first identify what is it that the client actually wants. Because, if you can, go to the depth of trying to pin down exactly his requirement, then it is easier to match out of the plethora of options available, finite, focused array of products to be given. So that's the first thing. Two, I think, we in India, Indians are known to be very emotional and very relationship oriented. So a lot of things you take it for granted, and many things, happens on the basis of relationship. I think there's a lot more formal way of communication with international clients, because they want everything to be documented. There have to be agreements are to be in place, and there are no scopes for deviations. Or if there are any deviations, even those need to be documented. So there's a lot more formal way of communication. And fundamentally, we are an emerging economy. Our stock markets have been on a roll. Our economy is going for a phenomenal growth. So capital appreciation is given in India. But when you look at wealth management at the core of it, in most developed markets, I think capital preservation is a primary goal than necessarily capital appreciation. And I think that's where the whole, shift happens in terms of how do you deal with clients who are looking at more capital preservation than necessarily capital appreciation. And to a certain extent, in very large ultra HNI families, also it exists. It exists in India too. So I think, and also, uh, when I look at India, by default, succession planning happens to your spouse and your children and your parents. By default. So if nothing exists, it's definitely going to your family. I think that's not true in the international client space, right? So there are 3, 4 ways you can transfer your wealth. Of course, it can go to your family and children. And the second way is it can go to charity. And I think many clients do prefer giving it to a charity or a foundation or a particular cause they are very passionate about. Or it can go to the government. You can choose to give it to the government as well. So I think fundamentally, because of the cultural differences, I think this is how international clients behaviorally do things very differently.
Very interesting. So that's a very formal process that they follow when compared to we Indians who are very emotional people, right? Interesting. Vikas, it's over to you now.
It's very interesting. I heard about, by the way, I've been taking notes as you've been talking. So I have not been distracted. I've just been taking notes. You mentioned something about emotions versus, and you mentioned about formalization. One of the things which strikes me as a cultural, why these cultural differences are there apart from the obvious reasons is, I think overseas, people have, I think for the last 20, 30 years, wealth management has grown there. It is because people have a mindset of abundance. We in India have come from a mindset of scarcity. It's only in the last 20, 30 years, when you talk about mutual funds of 1995 or formal banking starting to pick up. So I think this whole the way we do things will also evolve. It will become more more formal. I was particularly interested in that word which you talked about, capital preservation. More and more people are now saying that all this is fine. I want to get risk adjusted returns. I want capital preservation. So it was absolutely amazing for me to hear what you just said. uh, Talking about you, and I think one of the things, Virendra, we are nearing the end of this session. I must tell you that there are some audience questions also which have come in, and there's a prize for the best audience question. But before that, just a couple of questions from my side. And after that, we're going to introduce a new section, a new way of doing things here. This is the alternates universe. We'll do something alternate here. But the last two questions I have from my side is, I'm very keen to know, considering your experience and whatever successes you've had, what are the biggest investment mistakes you've made in your investment life over the last 25 years, and what lessons have you learned from them?
So, I think it's a excellent question. And Bill Gates had once said that success is a lousy teacher, right? So unless you do mistakes, you will never learn. And I think it's so important that when you reflect back, in your younger self. So I'll tell you one big mistake which I did is, when I took up my first job, actually I had worked prior to my MBA, and there was some pot of money which was there with me as, savings, and I had worked for a year before I actually joined the bank. And there was this huge euphoria during the tech. The dot-com burst happened later, but prior to that,
Yeah.
right? And I think it was my first or second month, so the first salary had come, and then they had this pot of savings with me. And there were two NFOs. They were never called as NFOs then, but still there were two NFOs which had come at the peak of in January of 2000. One was the Alliance New Millennium Fund. And I could see there was so much of euphoria. Everybody was like wanting to invest into those funds. I was in Calcutta, and it had a big equity market and cult, and customers were just wanting to invest. We were doing these big seminars, 100, 200 people coming. And I thought probably I was missing out. And for whatever reason, I could not invest into the Alliance New Millennium. And the NAV got opened at 18 rupees. So that whole 10 rupees suddenly opened at 18 rupees. And I said, wow, man, this is lottery. So almost 50% of my savings, I bunked into the Alliance New Millennium Fund. And post that, I think the NAV never saw 10 rupees, I think. It just crashed and then it was perennially below that
Went down to
level.
2 rupees, if I'm not mistaken.
So that was okay. So within a short span of days, there was Prudential ICICI Technology Fund which came in. And with that euphoria, the remaining 50% of the savings also went there. So for somebody who's never invested into equities, you are, transitioning from a fixed deposit straight into a sectoral equity fund, right? And I think it is great to have these mistakes early in your careers because the pot of money you invest is relatively also equally small. But I think that's one mistake which, and I had to bite the bullet for a long period of time because the NAV, the market was just not recovering. And, the tech euphoria had died down and you had to stay put for the market. And therefore, like you said, the NAV had gone to about 2.5 rupees and one could track it over a period of time. Ki 10 rupees kab hoga. So I think, and when you do these mistakes early in your career, it gets, itched that I think risk profiling is so much important, right? And somebody said that, you don't have to lose what you already have. I think that's a mark of a very good investment. So you can play around with pot of money where, you're ready to take that risks and it's a 3 to 5 year time horizon. And clearly you need to have a better sleep also because the capital may erode up to 50% if you're doing an equity. So one is, look at what your risk profile is. Two is, clearly diversification because don't put all your eggs in one basket. Everybody's been saying, but unless you, really diversify, you really, and of course, the diversification has to be into uncorrelated assets because at one point of time, you have one stream of activities which are working in your favor and others are a bit low. And when you look at a portfolio level, it is fine, but then you tend to do the mistake that, okay, these, funds are not doing well. They're not supposed to do well because that's how your portfolio construct have to be there, that when the cycle turns around, your other part of the portfolio starts doing well. So I think some of these are very basics. And I think the third is when you do asset allocation, there has to be clearly return expectations from each of those assets. Because, when people come back and say, I want 25, 30% equity because last year was 50%, I need 25% this year. So you need to really, know what is the limit because with every additional risk comes return. So if you want higher return, there is higher risk. I mean, there's nothing called as free lunch. So I think these are the 2, 3 learnings I've had over the longer period of time. And I make sure that when we do discussions with clients and our team members, I think these are embedded very well.
As you're saying that, Virendra, I think there's a wry smile on anybody who's been through that patch. So
Virendra, did you not try the rupee cost averaging as the NAV was going down?
Did try that, to be honest, but since I had limited pot of money, most of the money was exhausted.
Thank
That
God
was
for
not
that.
enough. And again, patience, because you have to wait really long for it to bounce back. It never really went back.
Took a long time, yeah.
It's very interesting. I think everybody's been through that. You just tread on a lot of toes right now by bringing back those memories. But yes, you're right. These are all memories. Last question which I have: if there's one piece of advice which you want to give to your younger self, what would it be?
So yeah, I think all of us are very impatient when we are in our 20s. I think good things take time. And my take to that is, your mind has to be extremely tough. In parlance of, let's say, a sports person, or even when we run, we say that body is a slave of mind. So the mind has to be very, very tough. So, if your mind is agreeing, everything else will follow. So you have to work on your mind to be very tough and very clear of what it wants. Everything else, the body and, everything else will follow accordingly. So that's what I personally believe in it.
Words from a seasoned marathoner, I may add.
And
Very true. You're
prospective
absolutely
Ironman.
right. So we've got a section, which we thought we'll start off with on this episode. This is This is basically an alternative. We asked you some long format questions. Now we're going to ask you some rapid fire questions. It will take all of, I think, 45 seconds before we move on to audience questions. I think the first three or four they wanted to ask. So they, why don't you just ask those first three or four
So,
questions?
Virendra, I'm going to shoot some four questions at you. Quick questions. So here I start. Your most memorable career stint.
I think probably that's the first time I met Vikas. It was in Chennai. I was, the investment head for our south branches for the bank which I was working earlier. And amazing learning. I think Sensex was close to about, I think if I'm not mistaken, around 2,700, 2,800. And there were,
Yeah.
people, investors into chit funds, and they all believed that, that's the best way to invest. And here I was without a laptop trying to convince people that how the price to equity ratio is so low. And, we had in 2 years' time, I think the AUMs more than, I think if I'm not missing, our revenues increased 11 times in those 2 years because, it was an amazing way to go and meet clients and convince them that why India is at a very, very low valuation. And, of course, market supported after that. And I won my Global Chairman's Council because of that. But one key learning was I could never form a successor in that 2 years because I was the investment head and I was told to hire people under me. And I realized that after that, I mean, that stint, I was trying to take a look at a mirror person to hire under me, and I could never hire the right ideal person. And I think my boss called me at the end of the 2 years and said, the biggest failure you had was you couldn't hire a person. And post that in my next stint, I hired people randomly from hotel industry, people who were selling IT software, people who were selling Samsung televisions, and some of them turned out to be the best resources. Some of them are now the investments head in banks. Some of them are private banking heads. Some of them have started their own businesses. So clearly, I think the domain skill can get built. I think the attitude is what I think you
Most
need to look at
important.
when you're hiring. I think that's the reason I feel it is very successful stint, but the biggest learning also.
So that takes me to the next question. The book which has influenced you the most. I'm sure some learnings have come from there as well.
Uh, I would rather say the book I would want to recommend to everybody, whoever it is, whether it's a housewife or a businessman or a young guy at 20 years or a old man, is, Atomic Habits.
Yeah,
Uh,
beautiful.
it is, I think, a Bible book one should have because, it talks about how you should, those minute, small, regular, daily, bit-sized habits. The power of compounding, which we talk in
Correct.
investments, I think is clearly the compound interest on habits makes, significantly big impact.
Okay.
Wonderful.
If not a banking, an alternate career that you would have chosen.
Banking was by chance. I'm actually a mechanical engineer and was very good at it. But I think in hindsight, I would have been a good lawyer, is what my family tells me.
You're very argumentative.
Good communication skills, I would say.
Oh, okay. All right. Next question is a sports icon who has left a mark in your life.
Uh, I think in my growing days, Kapil Dev had a big impact. I think, hard work. He used to, I believe, he used to work for 8 hours bowling to, get it right. Lead by example, and I think very honest. Matlab, dil se, you could feel Kapil when he talks. It's like clearly honesty
Straight
coming
from
in.
the heart.
Yeah.
That's it for me. Vikas, over to you.
Yeah. So
Very
this is
interesting. Yeah.
one word answer I want from you. Maybe in the one question is slightly more than one word. A movie which you can watch on repeat.
Oh, जिंदगी ना मिलेगी दोबारा.
Oh, really?
Friendship and
Okay.
overcoming fear.
Wonderful. If you have to take a year off to pursue a hobby, you know, what hobby would you pursue?
I think travel like a vagabond, write, read, run.
How nice.
3 hours.
And if you were to host a dinner party and invite three famous people, who would you invite and why? One word in terms of the name and one sentence in terms of why.
Okay, so this is clearly a stolen, question because I use this question for all my guests when I
Nobody
speak
told
to
me.
them. But okay, I think the answer is very clear. The first person I would love to invite is my mother. She's no longer there, so any time which I would love to spend with her. Second is professionally, of course, dinner with Warren Buffett, if possible. Nothing can beat that. And the third person, I think, who himself is a very food aficionado, is Sachin Tendulkar. So the three of them.
Wonderful. So I'll just straight away dive into the audience questions. Uh, Tejas H asks a question: will tactical allocation to different geographies help enhance returns, or India should write the India growth story and concentrate most of their investments in India to generate alpha? You've answered some part of it, but I think some more clarity is required by Tejas.
No, so clearly, I think we are in a very different, sphere of the economy, and clearly the returns in India have been very good. Always will continue to be good in the next few years. But it is always, like I said, putting all your eggs in one basket is not the best of the things. So if there is an opportunity, if you have a dollar liability or external liabilities, it's always a great thing to diversify across geographies also.
Wonderful. Vanshika, I'm sorry I beat you to this question. Her question was if Mr. Virendra could go back at the age of 20, what advice would he give to his younger self? So sorry, Vanshika, I just think I beat you to it. Uh, so Yogi is asking, how does a retail investor invest across geographies in a cost-effective way? You did talk about fund of funds, and you also talked about certain platforms where you can access investments in terms of fractionalization. Is there anything else you'd like to add here for Yogi?
Yeah, I think if it's a retail investor and if you do not want to go into specific stocks, if I were to advise or if you want to start off investing in a very cost effective way across the border, is straight away go pick up a ETF which invests into the S&P 500. And I think you will get diversification, you will get a much broader index, you will have representation across, because some of those US companies will also have presence in multiple other countries, and from a cost perspective, I think it will be pretty effective.
I think that's a very succinct answer. I particularly like the diversification part. So BSE 500, amazing. Oh, sorry, what did you mention? S&P
S&P
500.
500,
So I'm
the
so
ETF.
India centric. Misha, I think your question on Gift City, some part of it has been addressed by Virendra. But this is a very interesting question again by Yogi. Nowadays, most assets seem to be correlated rather than uncorrelated. When you talked about gold, silver, equities, real estate, what's uncorrelated now?
Actually, if you look at it, gold is always a hedge asset class against equities, as an example. There could be overlapping periods when everything is going hurry, but typically when equities don't do well, central banks will get into defensive mechanism and buy a lot of gold, and that's where the gold prices will go up when the equities don't do well. So, like, this is an example of how gold and equities can be unrelated. So within sectors also, you have defensive sectors and you have cyclical sectors. So at times in a growth phase of the economy, you'll have certain sectors which will grow up, and there are certain sectors which are passive or which are low lying. So when you do diversification, you have to do across asset classes, across sectors, across geographies.
Wonderful. This is the last question. Vidyasagar is asking, what's your advice on smart beta indices as they provide active plus passive strategy and avoid human bias with good factors applied?
No, again, smart beta is coming in a big way. You have hybrid funds coming because of that, and there are multiple strategies to do that. But at the core of it is, I think we need to figure out what is your risk profile, what is the asset allocation, because fundamentally, products can keep changing. But your core philosophy has to be that, okay, what is my comfort level in terms of, my tolerance of risk, my time horizon, my investment objective. And accordingly, once you have your asset allocation in place, then you can say, okay, I have a core and a satellite portfolio. So what my core portfolio should be, and then my satellite portfolio can be a little bit more tactical. I can go a bit more sectoral there, depending what theme it is, and so on and so forth. But at the base of this is whole is your asset allocation is the key, and then you have to have a core portfolio which will be withering all the ups and downs, and then you can have a sort of a tactical play to that.
Just to buttress your answer, I think Vidyasagar, we've done some extensive research on quality as a factor. There is a white paper available on our website. If you can't find it, please do write in to us. This will probably answer your questions in terms of at least one factor or maybe a comparison of factors between quality and value. This is being very well appreciated in the market. So please buttress what Virendra has said after reading this white paper, and it will probably give you a lot of answers and clarity in terms of what you want. That brings us to the end of the show. And Virendra, if you're okay with that, I think Vidyasagar asked a pertinent question at the end. That was the last ball six. Should we give him the prize for the best question?
Absolutely.
Okay, wonderful. Thank you, Virendra. I think this has been a very insightful and engaging conversation. I think your colleagues did mention you do hold everybody's attention, and I just realized we've crossed 5:30, and we still have a bulk of our
Questions.
viewers on that. Amazing.
Thank you so much for inviting.
Thank you.